You are watching Market Watch, the brief overview of the key events from the world of finance. In the previous 2 weeks, almost all representatives of the Federal Reserve warned investors that a premature rate cut was not advisable. Moreover, the head of the American regulator, Jerome Powell, almost directly stated his unwillingness to lower the rate in March. Since inflation turned out to be significantly higher than the predicted values, these warnings sounded differently. If at the end of 2023 and January of this year, we were talking about 3 rate increases, now it is difficult to rule out a scenario in which the rate will remain at the same level until the end of the year or at least in the first 3 quarters. This is a strong bearish fundamental factor for the stock market and gold. But no one needs panic, so yesterday one of the Fed representatives tried to calm investors down. In his opinion, one should not worry too much about one report. Most likely, this was a hint of the Fed's willingness to cut the rate, but the question is when and how much. Judging by the reaction of the gold price, investors do not believe in the willingness of the American regulator to reduce the key interest rate in the medium term. As a result, U.S. government bond yields may remain high, thereby putting pressure on gold. But a return of quotes above $2,000 can be a very bad signal for sellers. Let's also pay attention to the lack of further growth of the US dollar. This is good news for gold buyers, because the weakening of the US currency will indicate that investors do not believe in the Fed's ability to keep the rate unchanged for too long. Given all this, it is important to pay attention to the upcoming publication of data on changes in retail sales and the number of initial applications for unemployment benefits. Even a slight deterioration in these indicators may support the precious metal and put pressure on the US dollar. And now let's move on to the cryptocurrency market, which continues to grow, updating the highs of the current year. The general optimism is due to the relatively stable inflow of money into newly created exchange-traded investment funds. According to Bloomberg, net inflows have already exceeded the $3.2 billion mark. As a result, this ETF is the fastest growing type of exchange-traded investment fund, which significantly increases the likelihood of further growth in the value of the largest cryptocurrency. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.